Hey, Bulls and Bears, how we doing? It is Tuesday, March 7th, 2023. Back with another dose of economic reality. Thank you for being here. Today was a huge sell-off in the stock market. Dow Jones down over 560 points. That equaled about 1.7%. NASDAQ down 1.2%. Russell 2000 0.9%. And S&P 500 down 1.5%. What was the big scare today in the markets? Well, it was words. It was words that were said. Isn't it? It's a strange thing that investing now has become listening to what a guy's going to say. This is Jerome Powell, by the way, the Fed. So Powell came out and told Congress today in a testimony that interest rates are going to stay higher for longer. Sit back and think about what investors are doing. They're listening to a speech to figure out what to invest in, to figure out where the market's going to go. Instead of looking at fundamentals, the economy, instead of looking at consumer strength and how much savings the consumer has, which is not much now. We're worse now than we were in financial crisis. Instead of looking at the fundamentals that drive the economy, we're listening to a speech. Well, actually, that is the fundamentals now. It's the rates. It's all based on rates. It's all based on debt. Low interest rates, easier to borrow money, easier to eke out some gains in the market because you're borrowing money to invest at cheaper rates. It's amazing, but that's the world that we live in. But think about this, the business news I was watching today. I watched CNBC for a minute, Fox Business, and the look on their face and kind of the sorrow that they emitted while reporting the news. Oh, this is a bad day. This is a bad day. When things go on sale, to me, that's a good day. I mean, if you're holding a bunch of stocks and the stocks go down, that's not good. But if you have more cash than you have stocks, that way if prices go down, you can buy more. That's a good thing. So if prices drop at the grocery store, if there's a sale, do you go, oh no, my investment in my food is dropped? Or are you happy that things are going on sale? I'm happy when I see the market drop. I hope there's a 90% drop, and then I'll be actually maybe a significant buyer in some of these companies that are priced ridiculously right now when you look at the price to earnings ratio. So I'm hoping for a market collapse. That'll be a better investment opportunity, in my opinion. And it's not just me saying that. Warren Buffett, one of his famous quotes is, be greedy when others are fearful. When things are crashing or have crashed, that's the time to buy. I would not be putting any more money into the markets right now. Some people are, and more power to them. Maybe they know something as far as rates go. Maybe they know that there's going to be rate cuts and that the markets are going to take off and skyrocket with rate cuts. But many of you know, and we reported on this a few days ago, that the market has been pretty strong considering that the Fed has been unwinding their balance sheet or quantitative tightening. We know that when the Fed does quantitative easing, they're buying debt. Therefore, companies can go out and offload their debt and use the money, instead of paying off the debt, use the money to buy back their own stocks. That's a buoy for the stock market. So people expected the market to decline a lot more rapidly, the stock market to crash. Some people expected it to crash because of the quantitative tightening. But what do we find out just a few days ago? Last week, we found out that other central banks around the world injected a total of $1 trillion liquidity into the markets. Wow, so this is what we have. This is a system of just digital numbers on a screen that are used as money. Digits on a screen are money, and they could press a button and click a mouse and keep this market propped up. They could take the market to all-time highs. They could tank the market by shorting a multi-trillion-dollar short across several different indexes or many stocks. It's amazing how much manipulation's out there. And I guess if you know what's going to happen, if you know the people that are doing this, then you have the inside tip. And I think that's what a lot of companies are doing now. They know what's going to happen or what's going to be said, and they'll get out in front of the trade, so to speak. That's why you see the market move so quickly as soon as some words come out of this guy's mouth. All right, enough of that. I try not to talk about the Fed much nowadays. If you guys noticed at the beginning of the year, I started talking about the Fed a lot less because it just gets so, to me, it just gets so boring talking about it. But that's the driver of the markets, right? So we have to report what's causing the sell-off, and that was it according to the news. And that's not me saying that. That's CNBC, Yahoo Finance, Reuters. I mean, all these different outlets are admitting this is what the cause is. So we have to talk about it. But it'll be a lot less because we want to focus more about how to manipulate, how to, there we go, I said manipulate again, how to navigate this environment, this economy. All right, but let's talk about what's happening here. Then we're going to talk about how to navigate this, in my opinion. Money-wise, millennials are sinking under the weight of their debts. A record of nearly $4 trillion was added to the pile of debt for millennials just last quarter, just fourth quarter 2022, nearly $4 trillion in added debt. And that's another record. So every quarter we're setting record after record after record. Now this just categorizes millennials, but if you look at the total, it's every quarter new records of debt being added. So not only are we at all-time high debt total, it's being increased at record amounts. And so this is not going to last much longer. And I continue to say we're not getting out of 2023 without a crisis. Maybe something big will come along to distract people from the crisis, from the debt crisis that so many people are under right now. And I say so many people, it's not everybody. I mean, if you're in the top 30%, you're one of the 3 out of 10 people, 30% of people that are still doing good. And many people in that category doing better than ever, saving more and spending less. So instead of going further in debt, you're either 1, out of debt, or 2, paying off your debt each month and getting less debt as we go along. So that's a very small fraction now, and it's shrinking as we go further in here in this environment with the high cost of living. And I was looking through some social media posts, and somebody I know said, wow, I had to get a loan for 8.5% for a car, and now my payment's like almost $900 a month. Of course, they had to go out and buy a new car. Oh, and by the way, this person said that they had gotten other rates offered for financing, 9, 10, 11, 12%. So 8 something percent was actually pretty good for this person, but it's going to be almost a $900 a month car payment. So a lot of people are doing that. There's a record number of people right now with car payments that are $1,000 a month or more, a record number of people. So this doesn't end well. How long until we see car prices drop because of all of the repos? That is the question. Just a minute ago, we talked about how the stock market was being propped up by money coming in from other central banks. Will central banks do the same thing with car lenders? Will they just inject liquidity, click of a button, trillions of dollars go into these subprime lenders to keep car prices from falling? I mean, you may think that sounds crazy and ridiculous, but look what they've done with the stock market. It wouldn't be surprising to me at all, especially considering this. Used car prices actually went back up for the latest month that we have data on. Prior to that, we saw several months in a row where prices were dropping. Used vehicle prices increased 4.3% in February from January. This was the largest increase for the month of February since we saw a 4.4% increase rise in 2009. That was coming out of the financial crisis. So this is a very surprising thing. If these numbers are being reported correctly, vehicle prices are going back up. Just when you think, with more and more people getting behind on their car loans, just when you think that prices should be coming down. So what's happening? Are more people just getting approved for loans that they normally would not get approved for? Without a zero reserve requirement, could banks make loans on vehicles that are $1,000 a month? I mean, the type of lending and the type of debt that's being issued right now, it's outrageous. And that's really something that's keeping these bubbles from popping faster than they already are. So that's, please let me know what you think about that down in comments. Is the same thing happening with vehicles and car finance companies and banks that give auto loans? Is the same thing happening there as what we saw in the stock market with just central banks pumping in money? And it doesn't have to be the Fed, because globally, these central banks are all the same. It's all digits on a screen. It's not real money. It's not real money. I think ultimately it's going to get there, but we're going to see wild manipulation before that's allowed to happen. And I think to prepare for this, you need to hold some cash. The only things I'm long in right now as far as investing for rising prices would be natural gas. I'm still in the natural gas ETF because natural gas took a really big drop. The others are gold miner stocks, because I think that gold miners are going to go up even if the stock market gets obliterated. I think that's going to be one of the exceptions is gold miners and miners in general. And also still accumulating gold and silver. And a little bit of crypto, not much, because I know that the SEC is coming after crypto. So I'm being very careful with that. I still hold some. When it dropped, I grabbed a little bit more, but nothing major. Still big portion of cash, waiting for the cards to fall where they may. And the differences right now between Wall Street and Main Street, to me, it's mind-boggling. I mean, I talk to a lot of investors at my job and just people that I know personally, and I hardly know anyone that's investing for a rising stock market or going long in these markets. In fact, if you look at this survey that came out here recently, 40% of people, of Americans, think that we're going to have a world war. World War III is imminent. Almost half the people think World War III is imminent. So that should show you the outlook for most people. And that's just people that think we're going into war. The people that think that the economy is going to go into a severe downturn or that's already in a severe downturn, those people are close to 70%. Interesting, about the same number of people that are living paycheck to paycheck. Actually, there was a study that came out that said it's closer to 60%. Depends on the study, 60 to 70%. But either way, a lot of people are not doing so well right now. So be careful out there, folks. What do you think about today's news? What do you think about the car prices going up from month to month? Pretty amazing. So in a rising rate environment where people have to take on $1,000 a month car loans, car prices going up. Does that make sense? And the Fed's talking about higher rates. So are that many people desperate to buy a car right now? They're willing to pay whatever it takes as long as they can get financed. Pretty amazing. What do you think about the Fed talking about more rate hikes and higher rates for longer, impacting the markets? What a wild time, folks. We're going to wrap it up here. Big love. Thanks for being here. Keep stacking. Bye for now. We'll talk to you soon. Peace.